Greetings everyone, welcome aboard. Joseph James, schooloftrade.com. It's August 6, 2010. Happy Friday to you all. Happy summertime Friday. Now, of course, summertime Fridays, we had non-farm payrolls this morning at 8:30. We almost got our head taken off at 8:30 this morning, but we made it through the 8:30 news this morning. Ended up making some pretty good money today. Before we talk about the trades we took today, though, I want to remind you guys on the blog, use the search box, use our live support, right? Don't forget our Facebook, Twitter, YouTube, and then remember, guys, make sure you guys follow this blog. We put live trade calls on the blog. We post new articles on the blog, lots of videos on the blog. Make sure you guys follow the blog, guys. Very important there. If you can't follow the blog, right, the next best thing is to join our newsletter, and that's right below the blog sign up. All right, guys, so make sure you guys use that search box, right? Use the live support. All right, we took a bunch of trades today. Took a full stop on the euro, right? Had a couple close calls on crude and gold. I'll tell you guys, today was one of those days where I almost threw in the towel at about 9 o'clock this morning. I'm glad I didn't, obviously, though, because we ended up having a pretty good day here. 209 ticks, 203 for our total today, guys. So looking at 77.44 for the week. Right, so $7,000 for the first week here in August. Now that almost sounds good, except look in July here, we made 8,700 the third week of July. We made 11,000 the last week in July. So pretty good week here, right? Had a couple big days here, guys. But obviously what we really want to focus though here is we had a lot of challenges though at the beginning of the morning. Had to make it through that 8:30 non-farm payroll and come out the other end. So 209 ticks, guys. The Russell was kind of the savior today, right? The Russell really kind of kicked up the profit late in the morning. Let's take a look. 115,000 and change for the year so far, guys. It was a summertime Friday. We had non-farm payrolls here today at 8:30 this morning. And guys, remember, guys, when it comes to news events, non-farm payrolls is one of the biggest we see all year, right? Non-farm payrolls, quarterly GDP, FOMC announcements, right? These are all real big news events. Non-farm payrolls, you could speculate to say people have been waiting all week for this news number. All right, so we opened up our chart this morning. What do we see? We saw crude was sideways. Now, we played crude perfectly this morning, but just a couple bad bounces, took a loss on crude, made the money back, took a loss on gold, made the money back. So we had crude in a sideways market, but we played it perfectly. I mean, when you see what we did today, guys, if you're with us this morning, you'll agree. We played crude perfectly today. But it was just a couple ticks here and there that kind of put us on the sidelines. Now, we missed a huge breakout on gold, and I actually ended up chasing after it. We'll talk about that here in a little bit. Okay, the euro couldn't make up its mind. The dollar kept dropping and then bouncing off support, and whenever the dollar bounced, the euro would drop. We'll talk about that as well. But the euro couldn't really make up its mind. I took a full stop in the euro today. All right, and the Russell really kind of saved the day. The Russell gave us some great moves late in the morning that really kind of padded our account to make today really well worth getting up early, right, and finishing up a good week. So now here on crude, here's what we first saw on crude. Now, like I said, we played this market completely perfectly, guys, here on crude, but we were just a little bit off, right, with the entry time and taking profit, and we'll show you guys here in a second. But the first thing I want you guys to see here is we've got on the left side here, right, double tops. We've got double bottoms, right, from previous days. So we defined our sideways range here on crude. We also defined the sideways range down bottom. And we knew that right here, below 81 to 80.64, we knew that was going to be transitional area. Okay, so we knew between 80.64 and 81 even, that was going to be a pretty tough area, right, pretty choppy area. Now, what was our plan? Our plan was really simple, right? Here's the plan of attack. We were going to wait patiently, right? Our plan of attack was if non-farm payrolls pushed us down, we were not going to fall victim to trying to short this thing. We were going to wait for price to pop back up. So that was the plan, right? The plan was the non-farm payrolls were probably going to give us a little fake out breakout right here and then curl right back in, and then we're going to be buying, right, the low of this bracket. That was the plan. And it actually worked out perfectly. That's exactly what happened. Unfortunately, though, the market didn't really have the same plans for us. So let's take a look here and see the first couple trades of the day today. Now, here's that bracket low. And so non-farm payrolls come out, right, 8:30, 8:35. And so non-farm payrolls are out. And what do we see? Exactly what we expected to see, which was we had crude here now drop below the bracket, right, into the bracket below us. Remember, we weren't going to get caught up though. We knew exactly what to expect. We knew this was going to be a fake out. So it comes down and then curls right back up, and we're ready for it here at 81.20. Okay, we were ready for this thing right here. And there's your first entry here on crude. So again, we knew there was going to be the breakout to the downside. When we saw it, we were ready for the pop right back up in. We knew exactly where we wanted our entry to be. And we, first of all, the best part is we knew exactly where our target would be. Right? The target would be right here at 81.50. Right? 50 was our target the whole time. And you can see here we got the target filled. But we weren't in the trade when it happened. Right? So what happened was here, we got long here above the 20s. Right? So of course, here we are. We're going to break to the downside. We're going to bounce back to the upside here. We mark up our swing high. We break above that swing high. There's my first entry here at 24. Now you'll notice what happened here was that it went up. It literally got me into the trade. And then it sat right here. Right? It sat right there. And so around my point of entry, remember at this time, guys, non-farm payrolls had just come out. Right? It's, 8:45 right now. Okay, so it's 10 minutes later. So we are really seeing this market whipping around now. So of course I have to make a decision. What happened was momentum curled down. We started seeing big chunks of sellers. And even though I knew this trade was destined to get up to 81.50, my indicators were telling me differently. And so when my indicators tell me differently, I have to follow my rules, and I exited my trade early, just below my point of entry at -2. Now times 4 contracts, it's -8, so I lost 80 USD. Okay, now, at that point, we thought this move was done, right? We thought this move was going to curl over and head back to the lows again. So I thought maybe this was going to be the return back to that downward move, and we'd have to look in short. Well, that wasn't the case, though. Okay, what happened was this was just a little bit of a bounce. And so again, because my indicators told me to get out, I get out early out of this trade for a small loss, and what happens? Buyers come back in. Yeah, you know how this goes, right? There's my swing high. Here's my next entry. Okay, so of course, what do? Hey, this thing's moving back in my direction. Let's get back in, right? We can always get back in, guys. Look for that momentum to curl up. This time now, momentum stayed pointing up. This time now, we had big buyers on the tape. And this time, of course, right, we made some money. However, once again, I found a way to make a mistake here. Now, it wasn't much of a mistake. What happened here was on my second trade, follow me down bottom here. When I take my trade, I'm going to place my stop, right? If here's my entry here on my trade, I'm going to place my stop down here, and I'll place my targets up here, right? 1, 2, 3. Then what I'll do is once I get into the trade, remember guys, every time we take a trade in a 13 range chart, I have different profit targets. So I wanted to make sure my profit target was at 50, and 50 was down right here. So what I did was I quickly moved my target down, but it had already tested 50s, and it came right back down, right? So follow me up here again. You'll see exactly what happened. So here we are now. There's my target, right? There's the 50s right there. It hit my target, but my target wasn't there, right? So this was the problem, right? You can see the problem I got myself into. Is I knew where my target was going to be, but I didn't have my target there. And it's moving so quickly at this point that I can literally see the money being taken away from me, right? And so what happens is momentum then, of course, curls and points down, right? We start seeing big sellers again. I've now watched as my first target was tested but not filled, and I've still got all this risk in the market. Right? I've got all the risk still. Remember, I don't tighten my stop up until I get my first target. So my target at 50, I saw it tested but not filled. So now I'm in this trade, and I now see what? Momentum curl against me, right? Big sellers back in the tape. So now I'm thinking, oh my gosh, I've now done this again. My indicators now tell me you've got to get out now, right? Sellers in the tape, momentum pointing back down. Guys, this is no joking matter. I've got to get out now. Right, so now I get out of the trade here. I'm up by 6 ticks. All right, instead of being up by 15 ticks times 2, I'm up by 6 times 2.